Hello, today I'm going to talk about 10 of my favorite stocks. I'm going to go into what I like about them, give you some information. Hopefully, it helps you. Please keep in mind these aren't the only stocks I own, but I do own every single one that I'm going to mention, just for full disclosure. And here we go. Today is Thursday, November 2nd. It's the day after the Fed spoke, and funny day to be talking about stocks because they've had an incredible run since the Fed did their discussion. I was super excited about what Powell had to say. It makes me feel like they're coming to the end of the line in terms of their hiking. What I'm hoping to see is they actually can start cutting rates next year. And I don't really see it impacting mortgages too much, but I do think things will come down and you'll see the economy start to look a little bit more normal. That being said, I know the inflation hurts. I know things are real. I know people have credit card debt, and I think that's really rough. But I think the economy is doing okay, and I think they've done a really good job. I don't think we're going to have the huge recession everybody thinks is coming. Now, before I forget, do me a favor, hit the subscribe button, smash the like button, make some comments. I'm happy to discuss it. I know a lot of people don't agree with my opinion on the markets. I'm happy to get into it. The other thing is I'm going to put a couple links in the bio, in the description, whatever you want to call it, for ways to open up an account with SoFi. I use them myself. I also use E-Trade and some others, but I don't want to tout anything that I don't use myself. If you open an account with them and put more than $10 in it, they're going to give you a free $25. It can be a checking and savings account or it can be a trading account. I'm not sure, they might give an extra $25 for each if you did both. And it also, I opened an account with my son separate. He's going to be 13 years old soon. I like to teach him about this stuff and investing as well. And when you guys put in, it actually gives him a little gift as well. And he gets really excited about it. I think it's super kind and I appreciate the support. So now let's get into some of the stocks and what I see going on. I'm not going to put them in any order. So understand I like all these stocks. I tried to pick the 10 that I like the best. There are a lot of companies that I didn't include that I do like as well. So you guys have to do your own research too. These are just some stocks that I like. I'm just a guy on YouTube sharing the information I have learned over the years. And by all means, do your own research. I'm not telling you when to get in, when to get out, or what to buy. I just like these companies, and my goal with my account, I have a couple of different ways of doing things. I have one account where my goal is to own the companies I think are best. I try to be patient. I try to keep an eye on them. I try to get in when I think it's a good price. But the reality is, I think over time, the best companies will continue to outperform. I then have a separate account that are almost exclusively dividend paying stocks because my longer term goals is to have the dividends be covering my bills so that I don't have to worry about work or anything else and I just have monthly income coming in some form. Now, be real careful with that. Dividends can always be cut, they can be completely cut out, they can be lowered. All sorts of things can change with dividend stocks. But what I like about them is just the ease to it, the passiveness, so to speak. Passive income. There are a lot of videos that people talk about that. Even more so than real estate or anything else. I don't have to do anything. I don't have to worry if the air conditioner breaks. They just send the checks when the dividends come up. The reality is that you can also do similar with a stock that doesn't pay a dividend and pay attention and sell a little bit of the shares when you need it. I just don't like to have to pay attention like that. And the other thing is people's fear and greed, you tend to do it at the wrong time. The reality is you tend to sell the stocks when the stocks are down and want to buy them when they go up. I don't want to worry about that. And if they just send the dividend whenever it's scheduled for, I don't have to think, I don't have to make bad decisions. And like I said, my goal is to grow that account, slowly add to it as I get older so that I can move out of the things that don't pay dividends and move into the things that do. And hopefully have enough dividends coming in that it covers our bills and we don't have to think much about anything else. I still like to work, so I'm going to anyway, and now I'm rambling. So let's get into the stocks right now. So the first stock I'm going to mention is probably the one I like the best, which is Meta, or formerly known as Facebook. I love Meta. I love Facebook. The price to earnings ratio is really reasonable. They are a cash cow. They continue to grow even though they're big. And I like that. I feel like everybody hates Mark Zuckerberg, so it tends to always be underpriced. I think it's a big mistake to have an opinion about that stuff no matter what. And he's really good at what he does. The company continues to grow and grow, and they have a good, broad array of different products. I mean, their Oculus, their Instagram. I can't remember whether it's WeChat or the other WhatsApp, but he also has one of those, and they have a huge amount of subscribers. He hasn't monetized it yet, but I'm quite confident that they'll figure ways to do it. So I picture them continuing to be able to grow year in and year out. And the reality is they're actually pretty fairly valued for the move that they've had. So Meta is one of the ones I really, probably one of my favorites of the 10 that I picked. Number two that I'm going to talk about is Amazon. Well, who doesn't love Amazon? I mean, I use it for a ton of different things that I purchase. We have the Alexa app. We use their movies and television programs. Their Prime. It's really simple, and you get a lot of things for free. We use their radio as well. It just seems to be coming into our life more and more, and they're really good about returns and everything else that I think they continue to grow. Now, I'm a little concerned that their price to earnings ratio might be a little bit on the high side right here. But again, these are companies I want to own. So depending on my portfolio and what my real goal is, if I didn't own it already, which I do, and I'm not looking to add on or anything else because I'm pretty well invested, but if I wasn't, I tend to buy a small amount right off the bat. And then I hope to add into it if it goes lower and lower. But I want to make sure I have some of it. Again, you guys do what's comfortable for you. You need to know your own risk tolerance. Don't listen to me. You need to do your own research as well. That's just how I do things, and I find it works for me over time. And if I just stick with the good companies, it tends to work out real well. Number three that I'm going to talk about has to do with YouTube, which is Google. And I think Google is friggin' awesome. They actually dropped from like 140 a share to 118 or 120. Thought it was a great opportunity. I didn't see where they closed today. I try not to pay attention to the companies that I have. I really don't. I watch the markets day in and day out. I'm always paying attention, but I try not to be too sensitive to the ups and downs because I know what can happen with that. But I think Google is amazing, and I think YouTube is going to continue to take more and more market share. And I think it's the evolution of what television's becoming. So, as I mentioned earlier, I have a son who's about to be 13 years old. I don't even think he knows what ABC, NBC, and CBS are. I really don't. He watches YouTube. That is where he goes for his content to watch his TV shows. He actually watches these great history ones that I love. It reminds me like what Schoolhouse Rock when I was a kid, but on steroids. Like it goes into all sorts of stuff with the Roman Empire, and it talks about boy, he got into Napoleon, and he was watching about Genghis Khan and his brother, and all. It's amazing. So YouTube is where he gets his content, and then Google is not just YouTube. Of course, they have their search engine, and there are also a zillion other companies as well. When I've looked, so I really love Google. I think that it's something I want to have in my portfolio, and definitely one of my top 10. The fourth company I'm going to talk about in my list is Cisco Systems. So the reason I like Cisco is primarily because they were the darling of Wall Street for a long time when I was a little bit younger, and I think that they're kind of a forgotten hero. Uh, I don't watch them a ton. I like that they pay a dividend, and I like that they're not something on the forefront of everybody's list. So Cisco's just one of those ones that I think is really fairly valued, um, and that I tend to stick with because I'm comfortable where it is here. Um, I don't have a whole ton to say about Cisco. I just think they're also involved in the AI and everything else. And again, it's something on people like they don't think about it. And I like them as a company. And it's not one of the companies I have in my dividend account, but I do like that it pays a dividend as well. So number five on my list is Abbvie. I love Abbvie. You know, it gets me into the pharmaceutical realm. I know they just lost. I don't want to say lost, but Humira's lifeline of being where it was the only thing you can get has expired. So they're going to get some competition. That's going to hurt their sales a bit. But similar to Cisco, I really like that it pays a dividend. Abbvie has a good 4% dividend, and I think they have a lot of stuff in the pipeline that'll help to pick up those sales, and they'll be able to continue to grow. You know, I think they're a good company. I think they're well run. They were Abbott Labs before. Um, Abbvie's just one of those that I think is a good staple. And I think the fact that Humira was in the news that they're no longer going to be the only available option, that by hurting the stock a bit, it creates the opportunity to maybe pick some up. I don't know what it's done the past few days. Like I said, I know the market's had a huge move since Powell spoke, so might want to wait a bit, but maybe just get something or make the decisions you guys do when you do your research. Let me know what you think. Tell me, is it the right time to be buying it? I haven't paid attention too closely. So the sixth stock I'm going to talk about is Qualcomm. Well, I hate to say it today because I think yesterday was their earnings and they took off today. At the same time, it is what it is. Another great company that I just want to own. They're doing the chips for your phones and all of that stuff, and it gets forgotten too. Like people think of Apple and they talk of Nvidia because it's in the news, and I like Nvidia too, but different. I like it as a trade. Qualcomm, I want to own. Um, Intel and the others, and similar to what I said about Cisco, I feel like Qualcomm kind of gets forgotten. And I also like they pay an okay dividend. It's not a fortune, but they're paying 2 or 3%, and um, great company, well run, and I think they continue to grow like the others. So number seven, and I'd say one of my favorites, but really all of these are some of my favorites, is Intuitive Surgical. So what I like about Intuitive Surgical is they're kind of robotic surgery stuff, and they're it in the field. And I picture medical continuing to escalate and grow in terms of robotic surgeries and everything else. Uh, that's what I love about Intuitive Surgical. I think they have a hold on that industry and not a ton of competition. And I picture another 10 or 15 years, I'm not so sure the doctors are going to be doing the surgery, or more like they're going to be watching to make sure the machine doesn't have a glitch or something that goes wrong. I'd be much more comfortable with a robot doing surgery on me because I'm comfortable that their arm is going to be perfectly steady and they're not going to make errors. Nothing against the human, but the computer and the robots seem to be more precise. So I think as that industry gets bigger and bigger and they take a bigger market share, they're just going to continue to dominate and grow. I love Intuitive Surgical. Um, so again, I don't know what it's done today or yesterday. I assume it's done real well with everything else. But I like being in that space, and I like having something that I put into that because I really don't have a lot in the medical field. I have pharmaceutical, but I don't have anything that is the equipment or that realm. And I think that what's going to happen is over time, it's going to become more robotic and they're just going to do better and better. So number eight is another one that I hate sharing today because they had a huge day today. Starbucks reported this morning or yesterday, and they crushed it. They were up like 10 or 11% today. At the same time, I think Starbucks is the king. I mean, like they're going to continue to grow. Their sales in China crushed it. Their sales here crushed it. They actually sold higher priced items and had better ticket sales than they expected. I don't really see that changing. And what I like about Starbucks is I compare it to what McDonald's was when I was a kid. And I don't know if you guys have heard my other videos and heard the story about McDonald's, but I was fortunate enough to buy 100 shares of McDonald's in like the late 80s. Late 80s? Yeah, late 80s. And the $2,000 that I put into McDonald's, if I still had all of that in there, would be 250 grand or so. Well, I'm not promising anything like that, but I kind of think of Starbucks the same way as McDonald's was when I was a kid. McDonald's was an established company. There were already stories of people who had, their grandmother put $1,000 in and was worth millions of dollars. I think Starbucks is that same type of company. It's already established. They've got a good system in place, but I think they continue to grow. It's amazing to me that my son's friends that they go to Starbucks. They don't get coffee, they get the fruit drinks or whatever else. Especially the girls. Like they go multiple times a week. They want gift cards for it for their birthday. Uh, I couldn't imagine wanting a gift card to a food place at 12 or 13 years old. So it's really interesting to me that that's how their business is developing. And if the kids are going there, well, as they get older, they're going to continue to go there. It's not like they're going to just change their mind for some reason and stop. So I think they have a great foothold and a good business, and they're able to reproduce it in multiple locations and find success all over the place. So for number nine, I did a brother sister type of company. I'm going to talk about Nextera Energy and Nextera Energy Partners. Nextera Energy is the energy company that runs Florida, and Nextera Energy Partners is essentially the sister company that does solar and wind, and they sell the power to Nextera Energy. Either one of them is just fine. I really like Nextera Energy. I think it's a well-run company, and it's the one I push into for where I try to get into the energy sector. It's got a small dividend, so I'm not real concerned about the dividend. Nextera Energy Partners, on the other hand, has a rather large dividend, um, and I like them both. What I like is that they've fallen really far. Nextera Energy Partners fell from like $80 to 20. It's back up to 28 or 29 last I looked, which is great range, great place to be in if they're able to continue to pay their dividend and if they're able to grow. I just see good opportunity to own a good company at a discounted price. If somebody said, the stock market's the only place in the world that when things go on sale, people run for the doors. I find that pretty accurate. If Nextera Energy has fallen from 100 or wherever it fell from to 50 or so, people get really scared and they tend to get out of the market, and that's when the company might be on sale. Now, keep in mind, of course, things can be going wrong. Maybe they're not doing well. You have to do your research, as I've said. But at the same time, plenty of times it's really just the ups and downs of the market, and it's a good opportunity to get into a good company. Go back to the original point, I try to own really good companies in the account that I'm discussing, and I don't worry too much about the ups and downs. If one goes out of business, well, hopefully the other nine have done well enough that I outperform the market. Maybe I do, maybe I don't. I'm just comfortable picking my own stocks and not doing exchange traded funds. I really don't like them because you're also getting the garbage and the bad stuff mixed in with the good stuff. I know a lot of people love them. I just don't. That's me. You guys can like them, hate them, whatever you think. But I like the game. I would rather look around, see a company I think is going to succeed, and put a little money in it, and then not worry about it too much. And number 10, similar to what I did with Nextera, I'm going to give two companies because I like them both and it's more being in that sector. Is I like both Exxon Mobil and Chevron. I think they're great companies in the gas and oil company. I think it's good to have some money invested in that. I have a little of them both because I can't decide between the two, and I really like them. They've had great runs over the past few years. They're crushing it now. COVID really changed things, and with the war, which is really unfortunate, my guess is there's going to be more demand for oil and gas because all of these tanks and airplanes and everything else, they need all of that. My my guess, and I could be wrong on this, is that pushes oil prices up, especially since with the one war going on in Israel, it's going to impact the Middle East, and you might see them either cut production, keep it for themselves, or just use it as a as a tool to try to control other people with the pricing. OPEC can stop production so that the prices go up. They can manage it however they want. And my thought is as the war continues on, more demand for oil pushes the prices higher. Companies like Exxon and Chevron should benefit from higher oil prices. I hope to God the war ends sooner than later. I hope that I am wrong for other reasons, but I still like to make my bets based on what I think and not what I hope for. Hoping and thinking are two different things. Unfortunately, I think the war could last a long time. It's triggered things that I hadn't seen since I was a kid. And I don't think it ends in a short amount of time. That stuff lasted for years back then. I have a feeling this could last for years now. So anyway, I'm going to remind you the same thing I did in the beginning. If you've made it this far, thank you so much. I really love that people have been asking questions and commenting and chiming in. I am so honored and flattered that people are watching the channel. Like, I really am. I like this stuff. I find it interesting. I hope that by sharing, some of you get into it as well. I imagine if you're watching the channel, you at least find it interesting. It's really easy to do the research and Google search, and Yahoo Finance is a good place to get information. Feel free to ask me. I do not know about every stock. I just know about the ones that I watch. I don't worry about ones I don't know about. I try to pick a few that I'm comfortable with, and I try not to take on 200 or 100 or even 50. I actually try to limit it and put a larger amount in the ones that I like. But again, thumbs up, like, subscribe, comment. Have a great afternoon, and I hope to see you guys tomorrow.